Hello and welcome. My name is Casey, for those of you that don't know me, and I am the owner of the Casey Williams Company, an accounting firm, and we specialize in helping service-based businesses to save on your taxes and get current and up to date on your monthly bookkeeping. And so that's what we specialize in. We do taxes and bookkeeping and payroll and help our clients every month to stay current on all of their stuff that they have to do. And so this time of year, it gets to be a little bit crazy because everybody wants to, or should want to, look at your books to see where you are so far for the year. Now, you should have been doing that all along, but sometimes the year kind of gets away from us. And so we get to this close to the end of the year as we're headed into, we're over halfway through October already. Isn't that crazy? And so we're thinking about where we are for the year as far as income, as far as expenses. What is it that we need to do to be able to take the best strategic approach for our taxes in our business? And so I have a couple tips for you. Hello there. First, you need to figure out where you are income and expense-wise. So figure out what your net profit is going to be if you were to close your books right now. Now, a lot of people, if you've been in business for a year or two or three or four, you know already about what you're going to bring in for the last 2 months of the year. So some people, it's a huge time in their business and they get a lot of sales in the last couple months of the year. Other people, not so much. You really don't have a lot coming in. Most people take off most of the month of December because of the holidays, and the last week of November is for Thanksgiving, and so people are traveling, and so you really don't have a lot going on, especially if you sell courses where people are going to be engaged in your course for 6 to 8 weeks. You're probably not going to launch a course over the holidays. So you're almost finished with your year, unless you have a few last minute sales or people try to buy at the very end of the year in anticipation to use it in the new year, which is a great strategy. If you have people that want to purchase at the very end of the year, they're going to pay for it in December, and then they have the expense that they can take off on their taxes for 2018, and you have a new client for 2019. So that's an excellent marketing tool that you can use to have people pay you the very end of the year in 2018 to take advantage of a program in 2019. So if you as the business owner are almost finished with your year, you know where you are, then you're looking to see what kind of saving strategies can you use. If you are an S Corp, which means you're an LLC and your tax treatment as an S Corp, that means you should be filing payroll. If you've not done that, it's not too late, but you need to get on it. So that is one of the requirements to being an S Corp, is you are required to pay yourself a wage. You're required to file payroll. So if you've not done that all year, you need to get on it, because you have 2 months left, 2.5 months left to get that set up and processed. So it can be done, no worries, but you need to get on it. Don't sit on it till December 15th and then go, oh, I was supposed to run payroll and I haven't done it yet. So get on it now. If you need help doing that, you need some direction, reach out to me. I've set up 3 clients today for payroll for this year, so we can get you taken care of. But you do need to process payroll, so that's one thing. And that is one of the tax savings tax strategies that we use. If you're an S Corp business, half of your pay, or about half of your pay for the year, should be paid to you through payroll. The other half of your payroll, you should pay yourself as a distribution. Now that gives you the best of both worlds when you do that. So if you pay yourself through payroll, the employer side of those taxes are a deduction to your business. So that saves you, so you get to take advantage of some expenses that you'll get to recoup later on when you pull on your retirement, when you pull Social Security, when you're old enough, 65, 68, whatever it is that you have to be to pull your Social Security, then you'll get to take advantage of, because you're paying into your Social Security now, and you'll get to reap the benefit later. So that helps you now because it's a deduction on your taxes, and you'll get to reap the benefits because you're paying into Social Security. It's always a good idea to pay a little bit of tax. Now, I have people that will argue with me, well, I don't want to pay any tax. That's great, but when you don't pay any tax, that means you showed no income or very little income in your business. So what happens when you decide you want to expand? You want to buy another location. You want to buy a new vehicle in the business. You want to bring on some employees and you need a line of credit to be able to do that. And you go to the bank and you say, I want to borrow money. And your banker says, sorry, you don't have any credit. Your business is not making any money. We're not loaning you money for a business that isn't making any money and you haven't made any money in the last 10 years or made very little money in the last 10 years. You're pretty status quo. Sales aren't increasing. You're not making changes. You're not doing anything to bring on more sales. They're not going to loan you money. Are you kidding? So it's a good thing to pay a little bit of tax. So in order to pay the least amount of tax, you have to do a very good job of organizing your expenses. Now, if you're an S-Corp, one of those ways is through payroll. If you are an LLC or a sole proprietor, you can pay into a 401k or an IRA. If you have a 401k, you'll probably be an S-Corp. If you have a 401k through your business, or maybe through a spouse's W-2, you could pay into a 401k, into your spouse's 401k. But you can set up a 401k if you are an S-Corp because you are on payroll. So you can set that up as an employee benefit because as an S-Corp, you're the owner, but you're also an employee. So you get the best of both worlds there. You get to take advantage of whatever employee benefits you set up for the company, but you do have to set those up and allow employees to take advantage of those too. So if you're contributing to a 401k and you have a company going to match your 401k at 50% or 50 cents on the dollar, your employees also get that benefit. So if you have employees, they also get that benefit. So something to think about in the future. But if you are a sole proprietor or an LLC and you want to you can pay into a Roth IRA or you can pay into a regular IRA depending on your income. Sometimes it's best to do a little bit of both. Sometimes it's best to do just one and not the other. It depends on your situation, but you can do that. Something that you need to do or need to calculate before the end of the year because you want to know where you are in order to know how advantageous it is for you to pay into that. Okay, because if you are making too much money, you can't pay into a Roth. Okay, so you can phase out of that. And so you want to pay into a regular IRA, and then you could take advantage of the tax savings that way. So that's another way that you can take advantage if you're a sole proprietor or an LLC. Now, you also, if you own a business where you are buying equipment, let's say that you need a new printer and you want to buy this big, luxurious $7,000 printer for your office, you can do that. Now, you want to do that at the end of the year, or, well, any time of the year is good, but if you're going to have a pretty good sized profit, you want to buy that at the end of the year, you want to buy it before the end of the year, not the first of the new year, because then you get to take the depreciation of that, which means that you get to take half of what that value is now in 2017 as an expense on your taxes, and then the other half is divided over the next 5 to 7 years. Depends on what you're buying. It depends on how many years you get to depreciate it. But you get to depreciate the other half of that over the next 5 to 7 years. So now let's talk about that. You can take half of that now, and then in 4 years, when your business is doubled the income and you're paying a lot of tax, you still get a little bit of slice of that depreciation off of your taxes. So it's very nice to have some depreciation carry forward into the future. So if you have the opportunity to buy a piece of equipment, you can do that at the end of the year. I calculate my husband's business in November to decide where he's going to be for the year, or the first part of December to decide where he's going to be. And then last year, he went and bought a tire changer for the shop. My husband is a mechanic shop. And so he went and bought a tire changer and a balancer, because otherwise we were going to pay more tax than what we had to pay, because we added some depreciation onto our business at the end of the year. And you can do the same thing. You can take that same advantage. If you own a rental and you need to buy an appliance to put in a rental, you can do that at the end of the year. If you own a farm and you want to buy a new tractor or a new combine or something like that, you can do that at the end of the year. Lots of people do that, take advantage of that opportunity at the end of the year. So if you have not yet figured where you are for the year, you need to get on it, because you're going to miss the boat in order to take advantage of some of the tax saving strategies. Some of them you can take advantage of after the first of the year, like putting your money into an IRA. You can do that in the first part of 2019 before you file your taxes. You can do that for 2018. You can do that. But some of your tax saving strategies, like going to buy a new piece of equipment and take the depreciation off of it, you cannot do that after the first of the year. So you cannot, your tax person's hands are kind of tied if you're going in February to say, I want to save on my taxes, what can you do for me? You're kind of out of luck on some of your options. You have a lot more options if you do it now. So go make an appointment with your tax person or your bookkeeper and have that conversation now, because it depends on what kind of business structure you are. If you're a sole proprietor, an LLC, or an S Corp, your options are different. So go check it out, see what you can do, because you could save yourself quite a bit of money. And I would say, for the most part, my clients save more than what that appointment costs in my experience. That's what it is. My clients save more by putting into play whatever tax strategy we discuss than what my appointment costs. So if you have a bookkeeper and you're doing bookkeeping, you need to make sure that you get that appointment scheduled before the end of the year so that you can take advantage of those opportunities too. Have a wonderful day. If you've liked this tip or these tips that I've given you, feel free to follow me here on Facebook, or you can also subscribe to my YouTube channel, or you can check me out on my website, www.kclwilliams.com. Have a wonderful evening, and I hope you get to save on your taxes.